Good morning or afternoon, depending on where you are. This is another one of our Lunch and Learns, and we're going to talk about the power of processing WIP. My name is Deb Thomas. A number of familiar names on the attendees list. For those that I haven't met or worked with, welcome. I hope that you find some value in it. As always, please share your comments with our support team, anybody here at Can-Am, on the content or any aspect. If you have future topics that you'd like to have presented, we're always interested in your feedback so that we can continue to advance along with the program. Housekeeping rules. Everyone will be muted while I go through the presentation. This is a live presentation from my trainer's database. At the end of the presentation, I'm going to start answering the questions and try to show you on screen some of the items. On our attendee list, we have a couple of people that aren't using our best practice recommended WIP process. Can-Am Systems has developed 3 different versions of WIP. Our best practice is similar to a percent complete type of WIP. The biggest difference is percent complete often is a percentage of revenue. In our case, we take costs, mark them up by the expectation of gross margin on the job to earn revenue. So it's a similar result, but it's driven by cost. The second method of WIP is more of a cash basis type accounting. So during the month you post costs and invoices. At the end of the month you transfer all of those to your profit and loss, or anytime you run your WIP. The job remains open until you close it manually. The final version of WIP is a completed job type of WIP. Costs and invoicing stay on the balance sheet until the job is completely finished. Doesn't necessarily work as well in our business for companies that do repair, reconstruction, new home, general construction, those longer term jobs. However, it's a very viable method for the short jobs, somebody that's primarily in emergency or mitigation services. If you have a carpet cleaning division, things like that, it can work very, very well. So today's class is about our best practice WIP for the insurance restoration business. So by that, you would have a blend of jobs, both short and longer term. And this method grosses up your cost. One of the misconceptions with this is somebody will post a sales invoice and it doesn't show up immediately on their profit and loss statement. So they think that there's a problem. If they haven't spent any money, technically they haven't started the job, if you will. Therefore, you haven't earned any. Even if you invoice up front, you have to do some of the work to have earned it, which is the basis for our process. Regardless of what method of WIP you're using, regularly you want to go to the report menu, job management, and run your active job listing WIP. Third item on the list. It can be tagged onto your user menu, so it's in a short favorites list if you like. To just check the balance, you are going to leave the date alone. Select Show GL Balance by itself. The theory being, if it's in balance today, it was in balance yesterday. As you see, you get subtotals by location. you simply move to the last page. And here we'll zoom this up so you can see it a little bit better. We're checking the deferred revenue column here, right beside GL cost. You won't be able to see my mouse. And the WIP balance, which is third last column. You go down to the bottom of the report. We've the location subtotal. Then we have the total line that goes across for the balances on this particular report. Finally, below the two columns that we are concerned about, the control accounts for the WIP, we see what is in the general ledger account. Rule number 1. If either of these columns do not match within a very small difference, you're not going to process any more WIP. You're going to dig in, determine the cause, fix the problem, or report it to support. There's no point of continuing because this is telling you that your financials aren't up to date. They don't have the latest information. So let's take a look at the deferred revenue. Our report is saying that the value is $800,089, $800,089.5191. The GL balance is $889,506.91. These two don't balance. On the WIP column, our report shows $67,568.24. The GL is showing $71,249.12, which is roughly $2,100 difference. So I'm going to take you through a couple of basic steps on how to locate this difference. The first thing you want to do is open that report filter again. Select Closed Jobs and hit Print. Now, when this report comes up, you'll notice that we have number size, exclamation, number type, exclamation. Don't be alarmed. That is telling you the system couldn't find any closed jobs that had a deferred revenue balance in them still or a WIP balance. And we've tried to make improvements that, a minor error can't close the job with these, but there are still a few ways to do that. If there's a WIP balance that tells you there's a cost on the balance sheet that hasn't been processed through WIP, if there's a deferred revenue balance, it's telling you there's either revenue that hasn't been recognized or there's a clawback because you've overcalculated previous revenue. So if there's a dollar value in either one of those columns, you are simply going to go and reopen that job and check your balance. There can be a few jobs here that match the outage value perfectly, and that's simply all you have to do. Open the jobs, then you're going to process WIP properly, reclose them when it's appropriate after those costs and invoicing and deferred revenue have all been balanced out and onto your income statement. So we know that we have a problem in our WIP. The very first thing you're going to do if you determine that there is not any closed jobs with balances to cause the problem, I'm staying on the report menu in job management. I'm going now to accounts validation. We'll do this in 2 steps. The first one is I'm going to set my date range back a period of time. Don't forget, someone can backdate a transaction. It's up to you to control when they can post and what dates they can use using the accounting periods in General Ledger. For today, we're going to go back to September 1st. And because we're May 16th, I want to go forward to June 1st. Somebody could have posted something as well. Let's go with months so that it calculates faster. So step 1, by month, pick whether it's WIP or deferred revenue, this WIP revenue here, and select print. And you'll notice in red that it's calculating, and it's calculating by month for us. It's going to give us then a report. When I look at this report, I see that I have a $150 difference on October 1st. Don't forget, we ran this by month. So that means September 1st was fine. Somewhere in that 30 days, or 31, counting October 1st, we have a $150 issue. So now I'm going back to my accounts validation. I'm putting in my September 1st date, and I'm putting in my October 1st ending date. I'm leaving it in days now. So I'm just calculating that shorter time frame. So now it is doing the calculating, and it tells you that in the red on a daily basis. So the reason I do this twice, the first time by month, is I don't want to calculate half a year by day if my problem only happened 3 days ago. Right? So now when I look at my report, I see that my difference started on September 14th, and it maintains that difference all the way through. So when I find this $150 problem on September 14th, it's going to fix the entire month. So now I move to my general ledger. Staying on the report menu, I select financial statements, general ledger by account ID. Remember, this is WIP, cost. So I'm looking at account 1151 for this. The control account labels work in process -job. I'm selecting my September 14th date. We know what happened that day, so we're going to start here. You're going to select current transactions because if there was an entry that was posted and unposted for the same value, those 2 lines aren't going to show. I'm only going to see what changed the value of that general ledger account. And I'm going to select Run. Well, we have our problem. On September 14th, there was a debit of $150, which was a posted journal entry, and we're given the journal entry. And the reference is saying the WIP is out of balance. There was a posting without a job number. And our new employee, Deb, is the person that posted this journal entry. So obviously we need to do a little bit more training. The most common user error, particularly with new users early on in the process, is creating a transaction and not attaching a job number. Okay? This is where I start. Sometimes you don't find it here. most times this is going to give you at least an indication. A lot of times people will go to the main menu, go into purchases and payables, go into vouchers. A lot of costs get posted to jobs through vouchers. And they can do a search there for September 14th. The reason that I go to the general ledger is it doesn't matter where it came from. Whether it was a voucher, a general journal, or a time card entry, they go all into that WIP account. So on the cost side, when you're out of balance, you always select account 1151. So the two most common reasons WIP goes out of balance is closing a job with costs or invoicing unattended, or posting without attaching a job. Anytime in our system, when you record something and you put in a job number, it's forcing it into WIP, as it should. And that will continue to keep your WIP in balance. So that's how you process and find some of those things. Let's take a look at the driving factors in your WIP processing. Okay? Critical elements. Estimated revenue. My best practice recommendation is you create a work order or import an estimate. So this number is housed on the estimate tab. You can do a manual work order, putting in the cost and assigning a margin, that's fine. Some people like to bring in an estimate, which creates a work order for every category. You may or may not choose to then go ahead and schedule your production based on those work orders. I don't care. Get the selling value of that job in estimated revenue. The reason for it is this is your safety net. If you overspend on a job, you don't want to calculate any more revenue on that job than what you're entitled to invoice. So imagine a larger job going over a larger time span. There's upgrades. There's change orders. There's a variety of reasons why this estimated revenue will fluctuate during the lifespan of that job. Those changes need to be recorded in that estimate tab, so this number is always up to date. If that policyholder chooses to paint their own walls, you will be giving them a credit. A lot of times they'll do something like that to cover off their deductible. Because you're not painting, you need to put in a negative paint allowance. You didn't do the work, you're not entitled to the revenue. So that can reduce this. Not every change is going to increase the value. The second most critical piece is your revenue percent. Every customer sets out default expectations based on job type. This particular company has determined they want 50% for emergencies. For a fire, might be a little bit low. Water, it's definitely low, but that's what this company has chosen. If you feel that's unrealistic, so an emergency is probably fine. If you're looking at a repair job, there can be a huge list of reasons when you write an estimate why you may not be able to hit that target. It could be the owner's brother, so you're cutting him a deal. It could be for someone that gives you a huge volume of business, so you're giving them 10 points off. There's a variety of reasons why it can happen. So when you write the estimate, if this is going to really be closer to 40, the estimator should have a chain of approval that he has to go through, and this should be changed to 40. I don't recommend changing this on a regular basis. You want to see what the estimate was written for, so you can use it as a report card at the end of the day when the job is finished to determine how well they did. How close to that expectation did they come? If they write the estimate for 40, it's already dropped 10 points, but they end up coming in at 30, you want to ask some questions. How did that happen? And follow the process. So these two pieces are critical, that they make sense. Estimated revenue needs to evolve with the job as the job lives and breathes. That being said, where's your safety net? If you're looking at a long-term job, you want to keep track of it as you're going along. Okay? A couple of ways to keep an eye on this and get your red flags, if you will. Of course, the job management report. We'll take a quick look. Again, this date range is very specific. Okay? The intent of this report is to give you the information on your jobs that are in the pipeline. Once they're finished, there's not a lot you can do about it. If it's really bad, you're going to have a senior estimator go through it all and make sure that there isn't any money left on the table that you can't collect. But the production is done. For the most part, you're going to live with the result. So that's why I don't change these dates. These dates are only because I'm picking today. If the job was production closed, completed, or lost today, it's going to appear. But if it's closed, completed, or lost on any other day, it's not going to appear on the report. Those are historical at this point. So I'm simply going to print it. You can refine these by staff member, by location. If you are targeting a specific job type, you're having trouble maintaining your results there, you certainly have lots of options here. So we're going to select it, and you're going to review it. Common sense tells you if there's costs posted to a job, they are work in process. Okay? Rule number 1, maintain this report. Ensure that your staff are updating the dates so the jobs advance through the stages or statuses of the job. When you receive a job, it should only be in that status a few hours before it moves on. Most companies, as soon as they receive a call, assign it to someone who goes out to the site and attempts to get a work authorization signed. As soon as they're on site, there's an inspected date that should be entered, making that a scoped job. So if your company policy is to hit the ground within 2 hours The only jobs that should be sitting in the received area are perhaps an internal job that you're monitoring or items that have come in the last couple of hours. Very small number here. You're scoped. Again, you're going to have a few more here. As soon as you complete an estimate, you fill in that date and it becomes a pending job. So when you get into these scoped and pending jobs, you're going to see some value for the plan of invoicing on that job. As soon as you get signed authorization, and each company defines that a little bit differently. Some go by a work authorization date. Some are satisfied with an adjuster's approval. Whatever your definition is, when you put that date in, it becomes a sale. And you need to be tough here. As soon as a job is sold, not only do I want the estimated revenue, that's an approved number by someone. They've agreed to pay that. I want it in the system. I want them to assign the gross margin that they're expecting to get so I can see an estimated cost value populate. I want to see on paper that they plan to make money when they've committed the company's resources. Don't accept anything less. When the work starts and the start date is in the system, it becomes WIP. Between the sales and the WIP, I want to see in revenue column here, actual invoicing. So on this, you get to see what they plan to bill for the whole job. But as they bill and as you receive money, you get to see it and measure those two things against each other. Best practices would recommend when you're getting the work authorization signed, you collect the deductible at that point. That deductible would then appear in revenue. If the check clears or the credit card clears and you post the payment, that will show up in the paid column. So you can monitor this to know which jobs those deductibles have been collected on. The bulk of my production meetings are going to be spent in WIP. I'm going to do a quick review. I've got estimators, PMs, PMAs listed on this report. So if I see something I don't like in a status I don't like, with their laptop, they should be updating it as you go through. But here, I have a budgeted cost, and I also have next to it the actual dollars posted to these jobs. So if my budget is $5,000 and I've spent $2,500, I'm going to say Mr. PM, or in some cases, an estimator writes and runs. Whoever is responsible, or maybe it's a team. What's your ballpark percent complete? If they come back and say, oh, we're about 25, 30% done, I'm going to say, why are you over budget? You spent half the budget. How are you going to do 70% of the work with half the budget? Very few good reasons for that. The biggest one would be a supplier deposit up front. High-end kitchen. Oftentimes they want a deposit up front. And that's fair enough, if the numbers make sense to that calculation. If they've spent half of their budget, I want to hear that there may be 60% done, because there will still be bills in the mail that haven't been posted. So you want to track that. Anytime there's a problem with the information on this report. You've got the team listed on the report. Expect that to be fixed directly. Using that on a regular basis, you will maintain a good working management list for what's happening right now. For accounting people, we have anticipated revenue exceeding estimate report. One of my favorites. I would run this every 2 or 3 days. You can group it and you know, sort and filter and things. Oftentimes I just want to see what's going on. So here is a red flag report. You want to maintain all of your jobs using the job management, but these ones are telling you you've got a real problem with this list of jobs. So before I run WIP, depending on your company, the method of WIP that you're using, I certainly don't like WIP to be left any more than a week, other than perhaps at the beginning of the month when you're trying to clean up all the costs from the previous month that have just arrived in the mail. That might be my only exception. But I want to pull this report a couple times a week, give it to the team that needs it. What we're saying, we have a job number, we have a job name, we have total cost. This is real postings inside the job. Whether they're material bills, time cards, doesn't matter, but it's a cost charged to the job. The system then tells you you should be planning to invoice the anticipated revenue amount. In this case, it's $8,000. So what the program does, it takes the $6,400 in cost, does the mathematical calculation to give you the revenue percent from the job screen. And remember, I said that needs to be what is the initial plan. And it's telling you what you should invoice. The estimated revenue, again, I'd like that to be filled in from the estimate tab on a work order. It's telling us for this particular job, we're only going to invoice $250. So problem number one that I have is that obviously you're not running this report enough to rack up $6,400 in cost on a $250 revenue. Okay, these are job inputs. So this paperwork has passed multiple hands. Right now, this job has a mathematical problem in the amount of $7,750. So what do we do about that? Obviously, if we spent $6,400, we best be planning on invoicing a little bit more. So I'm going to my estimator and find out why the estimated revenue is not correct. I'm going to have that updated with the correct number. If he has a signed contract for $12,000 and the number gets inputted into the job properly, there's no problem anymore. The next time I run this job, it's not going to be here unless I overspend or whatever. So any job on here, and this is going to show you, if you go down this list, there's some small numbers in here. Here's a job that there's a problem of $23, okay? So a job will appear here when the number is minor. So run it regular. If my estimated revenue is correct and I can't squeeze another nickel out in the sales invoice, I'm going to look at that gross margin. Did somebody forget to change it to 40% from 50%? Did they get approval and just not adjusted the record? If that's the case, I'm going to change the number. by dropping that percentage, the system is going to have a lower anticipated revenue. If it's less than the estimated revenue, again, problem solved. That job doesn't appear on the report. The next thing I'm going to do is I'm going to look at the costs on that job, either by screen, I can pull the report, but I'm going to look at the costs. Make sure there wasn't some kind of an error. Maybe you've got a skilled carpenter that is showing labor on a contents job. That would be suspicious to me. I might dig into it. Maybe, his handwriting wasn't terribly clear, or, maybe it was the next job number in the list. So when he used his finger on his phone, he just accidentally grabbed the last one. The wrong one. Again, depending on how the information is getting inputted, you want to look at that. Okay. Correct the postings. When that gets corrected, the cost will drop, which means the expected income will drop. Perhaps again, if it falls under the estimated revenue, it comes off the report. If you've checked all of those things and everything looks legit and your production team is saying, no, everything is good, you now have a chance to help mitigate the cost. What can you do, change in that scope of work to make sure you don't go so far south? You have a chance. This is telling you, giving you the heads up, go look, make sure your data is correct, and then go and try to shorten down the loss. Basically, the last thing is it's going over budget. And it will stay on here until you close the job. So it can't get swept under the rug or forgotten. If you have PMAs or TCs, I would run one of these for each one. A couple times a week. And have it updated. The biggest thing with WIP is to make sure your inputs are correct. The work in process system uses the inputs in the system to calculate WIP and generate your income statement. It's very, very simple. Garbage in, garbage out. If you don't maintain the estimated revenue, the percentage, if you don't make sure the job costs are posted correctly to the jobs, you cannot run a good WIP process. Very important to always check your balances of your WIP. Always very important to use the reports to make sure the inputs on the job are correct. Make sure accounting is posting their information regular. Don't let accounts payable post once a month. Best practices is if the mail comes, everything gets posted. If there's some concern or approval necessary to pay it, you put it on hold so that the system won't let you pay it until that concern or approval was addressed. But it gets that cost in the system where it's visible, and you get valid, accurate work in process and financials out of it. All right. I don't have any questions currently. Please enter your questions in the chat box, and I'll be happy to address those. If you find, regardless of method of WIP, it goes out of balance, and you're unsure on where to go to find that, or how it was caused, or how to track items with it, please reach out to us, either by email to support@canamsys.com, by telephoning in 866-992-2626, option number 2. Ask for a ticket to be created for training or support if you know that it's a support issue. And we'll always be happy to help you. Don't be alarmed in the beginning if you're using this method of WIP that it takes a while to really see how each step happens through the system. Everyone goes through that. Okay, so Amber is asking, when entering expenses, WC, etc., and work orders are not directly associated, what do we need to do? Okay, write checks, thank you. To reflect that in the work order and close it. Okay, so Amber, there's a variety of things. Let's say you're writing a check for a building permit. There should be a budgeted item in the estimate. Hopefully your estimator didn't forget to add that in. So when you go to write checks, you can simply post it to the job, apply it to the correct category. A lot of times it's fee, F-E-E, and post it there. It's going to line up with the category. It doesn't have to go in through a work order. Excellent. Companies can set a set of default categories that make sense to them. They can be independent of Xactimate codes. They can be similar. You can choose what those are. So maybe on an emergency job, you have a category called EMR, emergency response. You can do that so that it can go out. Okay. What is the difference between closed and completed work orders? Not a lot. Okay. Most times, work orders are started and finished within a short time span. On occasion, you would have, let's choose HVAC. Sometimes they come and they do, install piping and things at the framing stage, but then they come back and connect it a few weeks down the road. Some people might choose to complete that work order when the majority of the work is done, although I wouldn't recommend it. It would stay open and available until the PM was satisfied that the work was complete, and they can select to close it if you're using web only. If you want the accounting captured against it first, as soon as you voucher it and attach that work order number, it will close it as well. But really, completed, you can schedule a completed work order, but you can't a closed if you so choose. That's about the only difference. The option is scheduling. Okay. Internal CAT codes. They have a dump trailer, and they bill this equipment to each job at a daily rate. Should this be its own work order to post against WIP? Absolutely. Absolutely. You don't have to do it through a work order, but you want to post the cost. If you are charging the use of the dump trailer in the job estimate, so if somebody's paying to use it, then you want a cost there. There are a variety of methods on how to get that cost in. I wouldn't personally go to the effort of creating a work order just for that. Any other questions? So Amber, if let's say you have a $10,000 contract and you want 50%, you can create a general work order that shows $10,000, 50% margin, giving you a $5,000 budget. That's the plan. Then through accounting, you can record all the costs. And if you have a cost total of $4,900, you're going to see that you did better than expected. You can do it as simple as one work order, or you can draw in an estimate and have it as complicated as you like. Really depends on the size of your company, your culture. If you've never used work orders in the past, bringing in that estimate and trying to use those to produce a job can be a little overwhelming for people in the beginning. The costs are attached to the job by the job number. Bank reconciliations are going to be done after all your entries are made. So regardless of bank rec or running WIP, you want to make sure that your accounting is up to date. You can pull offline bank records, so you can do that very quickly after your month end. Typically bank recs, you can update them throughout the month, but you don't finalize it more than once a month. So that's a good guide. Quite honestly, I would do the bank rec before I did the final WIP process in any given month. Not necessarily do it prior to every time. I would run WIP at minimum of weekly so that my financials were as up to date as I could make them. The only exception is you're not going to run WIP in May until all your costs dated April have been posted. So if your mail lags 10 days, you're not going to start May WIP until after the 10th of May because you're still doing April up until that point. Reason to select WIP Undo, really, if you're following the guide that we supply, ensuring the critical elements are correct, you shouldn't have to undo WIP very often. Very seldom. The only time I would recommend doing WIP Undo is if you forget to change the date. So let's say today is the 16th and I finally got my last cost in for April. I want to do the last WIP for April. If I forget to change the date to April 30th and I realize afterwards, I would undo WIP so that I could change the date. That would be the biggest reason for me to undo WIP. Again, there's sometimes errors are made and you do it, but WIP is undone globally. So if you've got 500 jobs and you process 500 jobs on April 24th and you choose to undo that, You are undoing 500 jobs. And so George is asking if you run WIP calculator for April and then immediately run WIP calculator for May, won't it pick up costs in the proper month? Yes, George, you're correct. However, you need to run WIP revenue for April to close out any jobs that are appropriate in April. You could, if you're under budget, you could be leaving money on the table that you can't close out until May if you've WIP calculated in May. So every month, you do WIP calculator followed by WIP revenue. Then you start WIP calculator for the next month, and everything works fine. If I run WIP calculator for April and the next day run WIP calculator for May and don't run WIP revenue in between, there'll be jobs that I won't be able to close in May if the WIP calculator entry was dated May 1st. If the cost was April 30th, but it was WIP calculated on May 1st, I can't close it until May 1st. The system, we've tried to build in enough safeguards that it won't let you close a job until after the last financial transaction. So the cost could be April 30th, but if it's processed in WIP calculator in May, you are not going to close it until May. Amber is saying we bill the customers the entire job value. And I'm going to assume that means up front. But they also want to use WIP. So therefore, the deferred revenue will always show over bill. So what it does, Amber, is it shows on the balance sheet the value that you owe the customer. So if you bill the entire job up front, but you've only completed 25% of it by the end of the job, your balance sheet is going to show a debt to the customer for 75%. You're entitled to the value that you've worked on. It will not affect the profit and loss statement or income statement. I should say, provided your inputs are correct. Any other questions? We're closing in on our time limit. My pleasure, Amber. And don't be afraid to reach out to us if you would like some one-on-one training and actually work through some specific examples. Our purpose for the Lunch and Learn is to share information so that sometimes you can learn enough to ask questions. You can't know what you don't know. So we're just trying to share information. That's the biggest reason. Love to have some feedback. You can send it to anyone at Can-Am if you like, into the support office, Ryan or Scott. We're all interested in making sure that we're doing something positive for our customers. Before you leave, I'll just invite you to watch for the newsletter. We are having a live user conference again this year in October. And there's early bird pricing with good savings. So watch out for that. Love to see you and have you join us in Toronto in October. I invite you to enjoy the rest of your day, and hopefully we see you at more of these classes. Take care. Goodbye.